Have you ever thought about a company as like a living, breathing thing? I mean, it's got a brain, a skeleton, an immune system, and just like any of us, it can get sick. So when that happens, who does it call? Well, in the corporate world, that doctor is the internal auditor. And today, we're going to take a peek into their world. Every single day, organizations are up against all sorts of invisible threats. We're talking about inefficient processes, maybe some fraud that's flying under the radar, or just plain bad decisions that can honestly cripple them from the inside out. So what's the main line of defense against these kinds of internal diseases? To get to that answer, we first have to figure out what a healthy organization even looks like. And believe me, it's about way more than just profit margins. It's about being resilient, it's about being efficient, and it's about trust. But yeah, keeping that health in check, that's a constant battle. Now, when you hear the word auditor, what's the first thing that pops into your head? For a lot of people, it's this image of some nitpicky inspector, right? Just looking for every little mistake. But that's the myth. The reality is, a modern internal auditor is more of a strategic partner. They're not focused on blame. They're focused on making the whole organization stronger and ultimately more valuable. Okay, so think of these as the common symptoms that our corporate doctor is on the lookout for. Are operations kind of sluggish? Is there a risk of fraud that nobody's even noticed? Is the company actually hitting its big strategic goals? I mean, there was this one audit at a huge retailer that found the returns process was so messy, they were losing millions in inventory they could have recovered. A simple fix, pointed out by the doctor, saved them an absolute fortune. These are the kinds of sicknesses that can cause serious trouble if you just let them fester. And that really brings us to the core mission of an internal auditor. It's not just about finding problems for the sake of it. No, it's about a much bigger mission to protect and even enhance the organization's overall value. And here it is, the official mission statement. This really gets to the heart of it. Did you catch those key words? Enhance and protect value. It's proactive. They're there to give assurance that things are working as they should, offer advice on how to make things even better, and provide insights that the leadership team might be too close to see. The official definition just drives this point home. Now, the two most important words on this slide are independent and objective. Sure, an internal auditor works for the company, but their whole function is designed to be free from office politics and bias. They have to be able to give a totally unbiased diagnosis, just like any good doctor would. But how can anyone actually trust their diagnosis? Well, that trust is built on a really strict code of ethics. It's kind of like a doctor's Hippocratic oath, and it all rests on 4 absolutely crucial pillars. Let's break down how this trust is actually built. First up, integrity. You just have to be able to rely on their judgment, period. Second, objectivity. Their assessment has to be balanced, not swayed by their own interests or by anybody else. Third is confidentiality. They handle some really sensitive information and they have to protect it. And finally, competency. They simply have to know what they're doing. Without these 4 things, all their work is pretty much meaningless. So what happens if just one of these pillars starts to wobble? Let's just take integrity, for example. The official guidance on this is crystal clear. Without it, the auditor loses all credibility. And that's really the bottom line, isn't it? If you can't trust the doctor, you can't trust the diagnosis. It doesn't matter how much data they've collected. Without that foundation of ethical behavior, their findings are, completely worthless. Okay, so what does this corporate checkup actually look like in practice? What are the auditors really looking at when they're examining the health of an organization? Well, it pretty much boils down to evaluating 3 critical interconnected systems that every single healthy organization needs to have humming along perfectly. First on the list is governance. The easiest way to think about this is as the company's brain. It's the leadership, it's the board of directors, it's all those high-level structures that make the big decisions and steer the ship. So the auditor's asking, is the leadership clear, ethical, and effective? Next up, they check the organization's immune system. That's risk management. This is all about the process for spotting potential threats, whether they're from competitors, the market, or even internal screw-ups, and getting ready to handle them before they can cause any real damage. And finally, they take a close look at the control environment. Think of these as the company's skeleton. These are the internal rules, the policies, the procedures that give the company structure and stability. They help make sure everything else functions the way it's supposed to, and that goals are actually met. Okay, so we've got a doctor who follows a strict code of ethics, and they're examining the company's brain, its immune system, and its skeleton. But so what? Why does any of this really matter in the real world? Well, this right here is basically the prescription for corporate health. A good audit isn't just some report that collects dust on a shelf. It gives real, concrete assurance that the safeguards are working. It helps the company actually hit its targets, it spots ways to get better, and at the end of the day, it protects the company's assets and keeps it out of legal hot water. So here's the crucial takeaway. The goal of the corporate doctor isn't to find sickness just for the sake of it. It's to build strength. A well-audited company is more efficient, it can handle unexpected storms way better, and it's fundamentally more valuable to everyone, its employees, its customers, and its shareholders. And that leaves us with one final thought to chew on. From the bank that holds your savings to the company that made your phone, there are internal auditors working behind the scenes. So the question really is, who's checking on the health of all the organizations that you depend on every single day?